Welcome back to Gold Rush Reporter, the channel where we break down what's really going on in the world of gold and silver. I'm your silver analyst, and today's topic is one that might surprise a lot of people. Still more pressure on silver? Surely you must be joking. But no, this one could turn out to be the most important shift yet, and I'll explain why as we go. Now, before we dive deep, let me ask you something. Have you ever wondered how many silver squeezes there actually have been? Because, honestly, I've been looking into it, and I believe there are only 2 real ones so far. But what if another one is forming right now, right under everyone's nose? That's the kind of thing we'll explore today, so make sure to stick around until the end, because the signs we're seeing might shock you. And before we start breaking down what's happening in the silver market, let me remind you, whenever silver dips, that's your best opportunity to stack more. Dollar cost averaging is one of the smartest strategies for long-term investors. And if you're looking to boost your stack, check out Summit Metals. They've got everything you need, and some of the best customer service in the industry. The link's right there in the description below. So, let's start from the beginning. The term, silver squeeze, has been thrown around a lot lately, and depending on who you ask, it can mean a lot of different things. Back in 2021 and 2022, we had what many called Silver Squeeze 1.0. That was when physical bullion demand absolutely exploded. Silver dealers everywhere were running out of inventory. But the interesting thing is, despite that massive physical demand, there wasn't a huge move in the spot price. It was premiums that went through the roof. That's what we call a physical market squeeze. Lots of demand, limited supply, but not enough futures or ETF buying to really move the global price upward. Then came the second round, what I like to call Silver Squeeze 2.0, around 2024 and 2025. This one was different. It wasn't just about retail buying or short-term hype. It was tied directly to deeper market pressures, tariffs, logistics issues, and declining numbers of good delivery bars. In other words, it wasn't just that people wanted silver. It's that there was less of it available at the institutional level, especially in London and the COMEX warehouses. And that's where we started seeing real consequences. For the 5th year in a row, silver demand has exceeded supply. Every year, that gap gets wider. It's not a sudden dramatic squeeze this time. It's more of a slow burn, a long-term tightening. That's why the overall silver market feels constantly under pressure. All of this has been driving silver prices upward again. We're now looking at prices reaching all-time highs around $54.50 per ounce, largely because of the same trends that began months ago. There's a strong bullish skew developing in the ETF options market, and we're starting to see patterns that hint at another big move ahead. And just wait till I tell you what some analysts, like Profits Plus ID, are finding in their data. His research could point to a third potential silver squeeze forming right now. We'll talk about that next, as we dig deeper into what these signals actually mean for silver's future. According to Profits Plus ID's latest research, there's something very unusual forming beneath the surface of the silver market. Something that might point toward a third silver squeeze. He's been studying ETF options data and noticed a bullish skew that looks eerily similar to what we saw back in early June 2025, right before silver's dramatic move upward. At that time, silver was sitting around $34.51 per ounce, and within weeks, it skyrocketed, leaving analysts scrambling to understand why. What's fascinating is that the same technical structure seems to be repeating right now. Profits Plus ID, who's known for being cautious rather than overly optimistic, found that the deviation between the put-call spreads in the SLV ETF, which, by the way, is now 100% owned by JP Morgan, is widening dramatically. This suggests that large traders are positioning for higher prices, not lower. And when you combine that with falling volatility in options pricing, it signals that the market might be bracing for another strong upside move. That's what makes this pattern so intriguing. There's another detail worth noting. Two major entities have reportedly exited their large positions in SLV. That could mean they're freeing up liquidity for other plays, or it could mean they're trying to avoid getting caught in another squeeze. Either way, the timing is suspicious, right as the data shows renewed bullish pressure. And based on what we've seen before, once silver holds above its upper technical channel, the move that follows tends to catch short sellers completely off guard. Silver's been battling to stay above that channel since May 2025, and recently it managed to hold its ground after testing support levels. That kind of resilience is often the calm before a storm. Technical indicators like moving averages, volatility resets, and momentum spreads all point toward a shift in sentiment. In simple terms, silver seems to be gathering strength, and the traders betting against it might soon find themselves trapped once again. It's worth remembering that when silver rose from $34 to $36 earlier this year, that move wasn't random. Those were key resistance levels that turned into support zones once broken. Historically, whenever silver sustains a rally past the $36 mark, it tends to open the door to higher highs, often above $45 or even $50 per ounce. And right now, silver hasn't just maintained those levels. It's building on them. In my view, we're at one of those moments where the short-term charts and the long-term fundamentals are finally aligning. The supply deficits, the shrinking inventories, and the ETF positioning, they're all painting the same picture. Pressure building under the surface. Whether this turns into Silver Squeeze 3.0 or not remains to be seen, but the ingredients are definitely there. And just like before, most investors won't recognize it until it's already halfway through the move. The signs are subtle but powerful, and for those paying attention, they're hard to ignore. In the next part, I'll explain how this developing structure ties into the broader market, and why the coming weeks could be critical for anyone holding or stacking silver right now. When you take a step back and look at the bigger picture, it becomes clear that the silver market isn't just reacting to technicals or short-term momentum. It's responding to deep structural forces that have been building for years. The second silver squeeze that pushed prices to that all-time high of $54.50 per ounce didn't come out of nowhere. It was the result of years of supply deficits, shrinking inventories, and growing industrial demand. What's interesting now is that all of those same factors are still in play, only this time they're even more intense. Over the last few months, silver has tested major support levels multiple times, particularly around the $34.51 mark. That number has become one of those psychological thresholds that traders and analysts keep a close eye on. Every time silver touches that range, buyers step in aggressively. It's almost as if that level has become a trigger for renewed bullish activity. When silver climbed above $36, we saw another breakout, and this time the market never looked back. Even after short-term dips, silver continued to hold strong above $45, a clear sign that the underlying demand isn't fading. What's really driving this demand, though, goes beyond speculation. The global shift toward renewable technology, electric vehicles, and high-efficiency electronics continues to fuel industrial consumption. Silver isn't just a precious metal anymore. It's a critical resource. That's why, even as we see price fluctuations, the long-term trajectory remains upward. Investors who understand this are quietly accumulating, while short-term traders keep getting caught on the wrong side of the trade. Meanwhile, silver futures for December 2025 are trading around $31.78 per ounce, which might sound low compared to the current spot price, but that's actually a reflection of how futures markets are hedging short-term uncertainty. What's important is that silver continues to test and hold above its major support channels from earlier this year. That kind of technical strength usually precedes a breakout, especially when options volatility is dropping and short interest is high. It's a perfect setup for another short squeeze scenario. As of the latest trading sessions, silver is hovering close to the $49 mark, and it's been reclaiming that level repeatedly in overnight sessions. That kind of persistence shows that the market isn't done yet. The gold to silver ratio, currently around 82, also tells a compelling story. Historically, that ratio has hovered between 40 and 60, which means silver is still undervalued relative to gold. But here's the key point. Central banks are buying and holding gold at unprecedented levels. This massive gold accumulation has distorted the ratio, making it less reliable as a predictor, but also hinting that silver could be the next metal to reprice sharply once gold stabilizes. As long as central banks keep hoarding gold, silver's true value will remain suppressed, temporarily. Once sentiment shifts and demand starts spilling over from gold to silver, we could easily see prices break through the $60 barrier faster than anyone expects. The data, sentiment, and fundamentals are all aligning. Whether we call it Silver Squeeze 3.0 or something else, one thing is certain. Pressure is building, and it's only a matter of time before it finds a release. In the next part, I'll break down why some analysts believe the moves we're seeing right now could rival some of the biggest silver events in history. The possibility of a Silver Squeeze 3.0 is now something that can't be ignored. What we're seeing in the data and hearing from within the community points to mounting tension beneath the surface. Silver Squeeze 1.0 was a ripple. Silver Squeeze 2.0 was a wave. But what's forming now looks more like a tide, steady, powerful, and impossible to stop once it breaks. Several community analysts have been watching this closely, and their findings are incredibly revealing. For instance, as I mentioned earlier, our community member, JM Unleashed, pointed out that in the past couple of weeks, short sellers have dumped enough silver contracts to cover 3 years of the world's total mining production. Think about that. 3 years' worth of silver supply traded on paper in a matter of days, all to try to push the price down. And yet, the price hasn't dropped by even 20%. That tells us two things. First, the market is far more resilient than many expected. And second, the underlying demand is absorbing those shorts faster than they can pile up. Now, when that kind of activity doesn't move the market down, it usually ends one way, with the shorts being forced to cover. And when that happens, it creates a chain reaction. Short covering turns into panic buying, and that panic buying triggers a price surge. That's how a squeeze begins. This is why people are calling what's happening right now a potential hot potato market. It's like everyone is holding on to risky short positions, hoping someone else will be left holding the loss when prices break out. Even more fascinating is how new players are entering this market. Several large investors and even a few multi-millionaires, people like David Bateman, are reportedly increasing their silver positions. Their entry doesn't just add money to the market, it adds credibility. When big names step into the silver space, it brings attention, and that attention alone can move the needle. Of course, we're not talking about a repeat of the Hunt Brothers scenario from the 1980s. The structure of the market today is very different. But even without a massive cornering of the market, we're seeing the kind of momentum that could push silver beyond $60 per ounce. If that happens, it will catch mainstream attention fast, and that could draw in even more speculative and institutional money. The key takeaway is that the silver market has become incredibly sensitive to pressure. And every short position, every ounce of physical silver withdrawn from the market, adds more fuel to the fire. This isn't just about emotion or hype. It's about a structural imbalance between supply and demand that's been building for years. In the end, whether silver hits $60 or even higher depends on how long this imbalance continues. But make no mistake, all the ingredients are in place. The only question left is when that next breakout happens, not if. In the next and final part, I'll show you the silver I recently picked up near spot price and share my closing thoughts on where I believe this market is headed and what you can do to stay ready for what's next. Before we wrap this up, I want to show you something that really ties everything we've been talking about together. I recently picked up some silver at my local coin shop, and I managed to get it very close to spot price. That's rare these days, especially considering the premiums we've been seeing lately. The pieces themselves aren't anything flashy, but that's exactly why they're so special. Real silver, bought at a fair price, without the hype, that's the kind of stacking that makes sense right now. One of the pieces I got is a Taint 225 Britannia. And honestly, it's a bit milky. You can actually see that cloudy finish on it. But you know what? I don't mind that at all. A lot of people think those milk spots actually make a coin more unique. It's still pure silver, and that's what matters most. I also grabbed a 1/4 ounce chunky round. A thick little piece with a nice weight to it. There's even a bit of a mark on it, but again, it's real, it's tangible, and it's a store of value you can hold in your hand. That's something paper contracts can't give you. When markets tighten and uncertainty rises, having that physical silver is peace of mind. You can see it, touch it, and know that it's yours. As we look ahead, I think we're standing right on the edge of something big. If the trends we've been tracking keep moving the way they have, silver could break $60 sooner than most analysts expect. And remember, it's not just about price. It's about positioning yourself before the next squeeze really hits. Keep stacking smart, stay patient, and never forget that silver isn't just a commodity. It's a form of protection. Now, before we close out, I want to give a quick shout out to Bob Coleman and JM Unleashed for their incredible analysis and insights that help guide discussions like this one. It's people like them and all of you in this community that make the world of precious metals so powerful, because together we spot the truth long before the headlines catch up. If you got value from today's video, please take a moment to like, share, and subscribe to the channel. It really helps keep this research going. And don't forget to drop a comment down below. I'd love to hear your thoughts on where you think silver is headed next. Are we on the verge of Silver Squeeze 3.0, or do you think the market still has some surprises left in it? This is Gold Rush Reporter. And as always, I'm your silver analyst, helping you see beyond the headlines and into the real story behind the markets. Thanks for watching, and I'll see you in the next one.